Well, welcome back to Market Day Report. I'm Tommy Grisafi. It's been an active day and I've enjoyed being here. Thank you for tuning in. Let's take a real quick look at corn and see if anything's changed recently. Looking at that SEP corn board, little improvement, 404 and a half, down 3. East corn, 418 and a quarter, down 2 and a quarter. Now, I was trading the markets personally last night. I thought they were quite active on the open, trading both sides, both lower and higher. So far for the month of July, we are trending lower when it comes to corn. Let's see what's going on over in the soybean market. Now that's something that might make our viewers and listeners happy. SEP soybeans 1101 and a half, up 1.5, and no beans taking control 1105, up 1 and a quarter. Good news coming out of the bean market, and I think you'll like what you see when we move over to Board of Trade wheat. SEP Board of Trade wheat 586 and 3/4, up 13 and a quarter. December Board of Trade wheat 609 and 3/4. We'll just round it up to 610. There you go, up 13 cents. Seeing a nice little wheat rally here to start off July. See what those funds are doing. SEP KC wheat 494 and a half, up 8 and a quarter. Dees KC wheat 611, up 8 cents. Last but not least, my favorite, spring wheat. Let's head up to the plains. SEP spring wheat 625, up 12 and a quarter. Dees spring wheat 644 and a half. Last but not least, we gotta talk cotton. Cotton here. Let's cotton 7205, up 7. Dees cotton looks like a quiet day over there. 72.72, up 3 cents. Let's bring him in. Mr. Oliver Slope coming to us live from Chicago, Blue Line Futures. How you doing, Oliver?
I'm doing well. It was a tough end to last week's trade, but it seems like we've got a little bit of a mixed bag to start a new month and a new quarter of trade, which is a little bit better than how we finished last week. But still, plenty of time left this week. But I wouldn't be surprised to see some of the volume thin out here after the first couple of days as we head into the July 4th holiday. But all in all, I think traders are still kind of digesting last week's report and keeping a very close eye on the weather. Obviously, the corn market really took it on the chin to round out last week's trade, and we all kind of relearned what we already knew, is that the American farmer loves to plant corn, right?
Absolutely.
That's just a really tough hurdle to get over when you have a surprise like that on the acreage number. But looking at the fund positioning, I think it's really interesting. Friday's commitment, the traders report had them net short about 278,000 contracts. Keep in mind that's just through June 25th. That doesn't really include the back half of last week's trade. I think if you add in the pressure that we saw in the back half of last week's trade, we're probably pretty darn close to a record net short position, if not overtaking that. So, there's a lot of bearish headlines out there, but a lot of that is known at this point with these reports behind us and with funds as short as they are. I wouldn't be surprised to see some intermittent short covering rallies provide some strength to the market.
Oliver, I like your ideas. When everyone's bearish, maybe we should go the other way. All right, you stay right there. That's Oliver Slope with Blue Line Futures. We're going to take a little commercial break, pay for a few things here when Market Day Report continues. Well, welcome back to Market Day Report. I'm Tommy Grisafi. We're going to hop right over to live cattle market, see if we're seeing any improvements over there. We'll start with August live cattle, 184.25, down $1.17. We'll do live cattle, 183.47. I want to do feeders real quick, and we'll talk hogs after that, and then I want to bring Oliver right back in. Augie feeders, 257.27, down $2. SEP feeders, 257.75, down $1.90, about the same price levels that we were at before. Do hogs have what it takes to close the day up? We'll see. Augie hogs, 90.12, up 62. Hogs down a little bit, 75.75, down 17, and Dees hogs still with that 6 handle. Let's see if we can get a 7 in front there, 69.52. Bringing back Mr. Oliver Slope, coming to us from Chicago, Illinois. Oliver, thoughts on the meats real quick, and then I want you to talk about the stock market. We are in the 1st of July, and that money swooshing around. What do you say, my friend?
Yeah, well, the cattle market, it looked like we were going to have a breakout midweek last week and just weren't able to get any follow-through. The seasonal strength has been a nice tailwind through June, but as we get into July, that starts to dwindle a little bit, and I think last week's price action is a little bit of a caution flag, especially for the feeder cattle market. I mean, with corn off as much as it was, you would have thought that would be enough to really get feeders trading back towards the top end of the range, if not breaking out above it, along with all the other bullish fundamental tailwinds. And the fact that we weren't able to do that is, again, a little sign for pause here in the near term. The outside markets, kind of choppy here to start the new month of trade. One thing that really caught my eye here to start the new month of trade is the bonds just getting whacked again. They got hit hard on Friday and again following through to the downside today, which means interest rates are rising. And if that starts to become more of a trend here through July, I wouldn't be surprised to see that put some pressure on the stock market and the indices, and potentially some of that money flow sloshing around like you had mentioned, put some pressure on the cattle complex.
Absolutely, Oliver. It's never been more expensive to produce a pound of beef, and we have to keep an eye. I'm old. I started in the corn room, and then I went over to the bond room. And so I've spent a lot of my time trading bonds. We had that lost 15 years where interest rates didn't move. Not only didn't they move, they went up. They've stayed up for a while, and everyone's saying they're going to come down. Not so fast. You look at a corn board that's went down as hard as it did, in an interest rate that's 3 times higher than the producers used to paying. It's definitely putting pressure on the producer, correct?
Yeah, absolutely. And as you had mentioned, a lot of people are expecting it to come down, but I've been hearing that all year. Interest rate cuts are around the corner, but they keep getting pushed back. So it'd be interesting to see how it unfolds, especially into an election season. So I guess I'll leave you with the wise words of buckle up and keep your hard hat on.
Oliver, I miss your pretty face. Maybe next time we'll see you here in person. All right, I'm going to hand it back to my friend Suzanne.
Thank you, Tommy.
The original pretty face. There you go.
Thank you. Yeah, I mean, we keep talking about, inflation, and are we going to get a cut? Is it going to happen? It's an election year. Your thoughts? I mean, I know you discuss this on a daily basis with your producers.
Well, we're going to have to deal with it, right? Yeah. My office is in Mayville, North Dakota at a bank, and every day I walk in there, and it still says, you have money? We'll give you 5% for a CD. If you need money, the cost for a farmer right now is around 9. So those are the numbers. We have to deal with them.
Right now. Thank you so much, Tommy.